Welcome back to the video 2 of 3 on 2.2. So, Google, what are you asking me? It's never been higher. It's going into a coin flip in 2 days. Flip your coin. Let me flip one for you. Hold on. Let me shine it up first. Heads, it goes up. Excellent company from a perspective of a P&L, solid. I use them. I can't stand them anymore, but I use them. I'm all intertwined. I don't think I can cut them away, but I don't do search on Google anymore if I can help it. I would be a buyer of dips into 180 or lower. Can it get there? Yes. How? I don't know. This is a sharp rising wedge. Rising wedges always break down. Always. I bet you someone here thought it was going to the moon, and then they had an opportunity to enter for 20% cheaper. You know, not to say that this is going to happen, but it just happened here. Wait, it happened here too? Oh my gosh. Oh, and here as well? Yes. Dips happen. Dips get larger and larger the longer you go with that one. So here's a trade from here to here. 50% almost, 127 days, 46, yeah, 127 days. Here we go, 148 days, 40%. So maybe we're due for another. This is a target of an inverse head and shoulders, just about 33. So maybe it has a little bit more. How about it spikes and drops? So if I'm invested in Google for the long term, there's nothing to do. Sell some covered calls if I have enough shares. If I'm looking to go long Google for an investment, you can wait out a tick, 2 ticks. Just in 3 ticks, decide. Nick, it could go up 5%. Okay, so you miss out 5%. You're in it for the long term, right? Okay, that's the point. People use the argument one way, but not the other. We'll see. I think the reaction to the earnings is going to be emotional, and I have no idea what they're going to deliver and how people are expecting. Grab, I think this is like a Uber type of a deal. So technically speaking, now they're selling rallies. They were buying dips on the way up. Now they're selling rallies. The question is 5 a strong enough resistance for them to lose 430? If they do, they'll lose 4. So if you lose 430, you're going to be under 4, comfortably under 4, like maybe 3.9, somewhere inside of this. 3.95 sounds good to me. Meanwhile, taking out 5 would get you 50 cents. Groupon, that's still in business. I remember I had somebody reach out to me to invest in a company like Groupon, something about coupons, Coupzilla or something like that, a long time ago. Okay. 9 or lower, buyers. 8 or lower, you'll probably end up at 6. So between 9 and 8, there are buyers. You can see it. This is a longer time frame. And lose 8, you're probably going to go to 6 or 5, which is this base here. The P&L is boring. Nothing exciting about it. Oh my gosh, yeah. Why are we doing this stock? If you're a trader, okay. If you're an investor, I caution you. Solid base for a trader is 9.6. Solid sellers for a trader is 12 or and above. I would not be long there. Oh, I don't know when it reports. 17 days. Goldman Sachs, give it room. I would short it if it wasn't Goldman Sachs. I would rather short JP Morgan or Berkshire Hathaway. It would be the same trade. Goldman Sachs does Goldman Sachs things. It's not a bank. It is leading the banks. It is probably influencing the Dow as well heavily because it is a large stock. A $600 stock in the Dow is a freaking heavyweight. Not for me. Solid support. It is support. Solid, I don't know. 615 to 608 support zone. There's a weak part in the stock until 595. That is a weak spot in the stock. So I will move it forward. There is support right here. short-term comments, of course, on that support spot because of the reaction from the last earnings. Yep, that's it. And it can rally. It can get to 670. GT Tires. Earnings in 4 days. If you're an investor for the long term, there's no decision. It has a bunch of support here, and maybe you spike on earnings. I'm not so sure. What is this? Okay. So the problem is 11. What's it going to take out 11? I think a freaking miracle is what's going to take. I wouldn't own it for an investment. It's like owning Ford. Why? You're going to need decades to make money. There are better investments. Unless they pay a heavy dividend, I wouldn't consider owning it for the long term. If you're trading it, also, there's not a lot of room. Look at the wall that lives on 11. What kind of a news are they going to tell you? Maybe you can print your own tires at home. I don't know, but that's going to be a miracle to take. Bulletproof support on paper and bulletproof resistance. So where's the investment? You printed a Tesla for cheap. That's funny. This one's a short, GitLab. From a trading perspective, this is exit longs, enter shorts with a stop. I would buy a put diagonal, sell a call spread, both debit put vertical or put butterfly, something cheap. This company is weird to me, but people who use it love it. So the P&L is pretty weird. They grow fast, but they're spending a lot faster than they're growing, so that's pretty weird. Let's look at the spending, the cash burn. Maybe there isn't. If there isn't, then this is an okay situation. They do have a good debt situation. Okay, so weird, right? They don't sell widgets. There's no cost of goods, but the operational costs are like on fuego. Where are they? Subscriptions. All right, that's a pretty solid subscription. SAS. All right, so let's see statement. Do they grow sales? Hell yeah, they're double-digit growers. Cash from operations. Let's see. They burn 100 million in 12 months. If they can sustain it, it's okay, but I don't know where they're getting their cash from. You know what I mean? Statistically speaking, 15 times sales is not outrageous. So it's not a short in principle. It's a short of a stock that's running into a prior fail. I don't start longs here. I would buy the dips. So if you're a trader and you would buy the dip into 69.50 or 67, if you're lucky, buy the dip for a curl and a breakout. Granger. That's pretty ugly. Okay. P&L flat as a pancake, stock going to the moon. Not right. That's the divergence I'm talking about. Well, they fixed it. The stock market said, not right. Nick, you're right. They brought it down. What's it going to take out 1140? A lot. And if you do, you're going to fail at 1200. So if you bought the dip, 1140 as a trade should be your exit. If you bought the dip from an investment perspective, you did your thing. So I don't get it. Look at this 1 year chart. Look at this 1 year and 3 month P&L. What am I missing? Why is it now? How much is this? Let's just go from here. Why did it go up 60%? And now it's still 43% higher than just this breakout down here. I don't get it. That's like October of 2023. It's pretty weird. It doesn't match. So be careful jumping in, assuming it's a buy the dip opportunity of a lifetime. Below 1,000, it becomes a solid entry point. Well consolidated. Home Depot, same story. But Home Depot is like a staple. I don't know. I like this company, and I couldn't invest in it up here because the market is at all-time highs, and this one has to trade inside the market. So even though I like it, I don't mind it. Costco the same way. What happens to these stocks that are okay valuation now from an investor's perspective when the market decides to correct? 2 months from now, 6 months from now, the end of the year. What happens to those? If you're an investor, from a trading perspective, totally tradable stuff. This is still a point of interest, a weak spot on the chart. Inside this, you go long. They blew past the weak chart on the spot up there and gave it up. As you approach 418, 420, it's a resistance, and I think there is a chance this one comes down below 402. Below 400 and 402 becomes a buy the dip moment from a trading perspective for a rally back up to 410 or 411. So it's definitely tradable. Above 426, you will have another stent higher to the top of this. Shortable will stops. Those are trading comments. Investment comments, own the stock for the long term. This here is not an all-in situation. You can get it out of your system and nibble long, but I would have room to double and double the double and then some. Earnings in 23 days. HIMS, somebody said, should I short it? I said, no. Buy the next dip. When it fell 24% in one day on BS headlines that Amazon is getting into it, I said, go long, and you had like hours to go long. This here is not an obvious entry point. It's growing hand over fist. My only fear from an investment perspective is that there's cheating going on. They dole out prescription drugs, and I guarantee you don't talk to a doctor, not even through emails. And it's just a smoke and mirror show. If somebody has a bug up a they want to come down after them, I am pretty certain they can give them some legal trouble. I could, and I'm not a lawyer. So good margins, operational, they can fix that. That's not good, but they can fix that. No debt to speak of. Income statement growing like gangbusters. So everything to love. Decent balance sheet. They don't bleed. They are positive cash from operations. So the only thing it becomes its valuation. 5 times sales, bargain. Don't short it. If you're an investor, kudos. I like it. Find the next dip. Buy it with courage next time it dips. Definitely don't short it. This is the exact same opposite excitement level from me than HIMS. The stock is falling for a pretty strong bounce level. But if the US is going into a tightening the belt where they don't want to spend a lot anymore as a consumer, that's the first stuff that goes. Who's going to buy a hog when they're struggling to keep their job? Earnings in 3 days. It also had a DEI headline, blah, 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 blah. I check out. When they start talking like this, I check out. Not for me. I don't care how low it goes. This is not a stock I would invest in. But if you like it and you're nibbling long because you're falling into a prior bounce, absolutely. Even as an investor, this is not a bad place to start. Please leave room to more than double, because if you get a disaster response and you get to 16 or 15, you want the opportunity to add a little bit. Spikes to 35 would be exits for me as a trader. Okay, so you do have some spring coming, like boing, but you do have a wall you'll hit once you get there. Hood. Okay. I'm a prior owner of this stock because I got assigned shares. I don't understand. I honestly don't understand. The person that asked, are you in here? Please let me know. What are we chasing here? What did we fall from? Yeah, I don't know what to do with the stock. I honestly don't know what to tell you. Technically, it's a nope. It's not an obvious point of entry. That's for sure. Investment-wise, it's a huge question mark. I would rather own Alphabet at all-time highs than Hood. No, not for me. Levels. 43 was the breakout. One would think that 44 to 43 now becomes an area of support. I can tell you there's a gaping hole down at 31 and 32. So this is an area that needs to be revisited. You mean to tell me this P&L, Inspire, is never coming back down to 30? I doubt it. I'm fairly confident that this stock will be below 35 in the future. So you can buy it at 50, or you can wait a few weeks, maybe even a few months, and get it for 35. As an investor, which one would you rather? And I could be wrong, and I would have missed out, and that's okay. for me. If not okay for you, you don't need to ask me. Just go along whatever you feel like it, because you clearly have more risk appetite than me. Hormel Foods, I don't like this. Every time they do a plateau, look here, they're trying to hold the floor, they lost it, lower. They're trying to hold the floor, they lost it, lower. Now they're trying to hold the floor. This better be the floor they don't lose. So if they do, 25 is doable. Meanwhile, 34 is a sell. If you break through 34, you can push to 37. That's another sell. It's shortable at 38. Whoops. Because that is that one. Every peak is a sell, and then it becomes a catalyst. So if they are able to take out 34, they can test 37. If they're able to take out 37, they can test 40. 40 would be a resistance. So I'll put it there. My mouse hit a wall. Bad thing about this mouse. Great mouse, but if you push into something, you're stuck. You can't click. I mean, you click immediately. Anyway, better hold. You lose 28. Flip. Trap door. HubSpot. Not an obvious point of entry. I have nothing against it. Solid growth path and everything. It's just the speed with which the stock is rising. Why was it? Why did it do this, right? And I was doing that. This is not an obvious entry point. Just ask these people what happened the last time they bought it up here. And if they say, oh, it's great, then go buy it. Okay, 15, 16 times sales, that is double 2 years ago. Okay, let's see. Q1 of 2022, 16. Okay, let's go to see what happened Q1 of 2022. That is Q1 of 2022 up here somewhere. So, too expensive. And not an obvious entry point. I would buy the dip into 660 to 600 on Hubs. IBM, I shorted it. That's the stock I shorted. Okay, that's the one that's mediocre. Okay, I remember now. So this stock grew like, what, 2% maybe. Forecasted 5% growth. Look at the reaction on earnings. Microsoft kills it. Miles below, better than this P&L. And it drops. Make it make sense, right? So from that logic, it's a short. We'll see. I bet I make money. We'll see. I shared it with you. So this here is not an obvious entry point. If I'm short, I'm comfortable with my short. This thing is going to disappoint people. There's no way. There's no way. Look at the P&L. Could not be more boring. And this is decades of lackluster performance. Decades. Not like a year or two. Decades of lackluster performance. I don't think I can show it to you here. Let's look at the statement. Let's go to annual. Look at the growth rate when companies could not stop growing. 2005, look, flat, red, single digits, red, 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 red. These are years. 2012 through 2017, shrinking in sales. You call that growth? I wouldn't. Flat. 2019, shrinking. 2020, we'll give it a pass. Single digit greens. Where it's still single digits. How is it at all-time highs? It doesn't make sense. 5 and change. Yeah, it's still, but you're making a point there, Jed. Is that good? You know, Microsoft farts 5%, and the stock drops. This one can't stop making all-time highs. Yeah, so that's my point, that they delivered 1 or 2% growth, and they forecast as 5 and change percent growth going forward. And that's just because they said AI growth. Who cares? How about you grow the overall sales first? Anyway, maybe they prove me wrong. So far, I've been right. It's not an obvious entry point. JP Morgan, I am short and struggling, but I'm not backing down. I will deal with the short position. It's a credit call spread. It's at the money. I believe it's at 270 or 275. I can't remember. And it's for March. So I have weeks to move it if I need to. I would even sell naked calls if I have to out in time. Earnings are not for another cycle, so I have reprieve from that. This is a buy the dip moment. The company's great. I've got nothing against it. I don't want banks leading a rally for tech. So this could come down to 255. If I do get relief on my credit call spread and the position was too large, which mine isn't, I would trim it down to where it's not that big a deal. It's not an obvious entry point, and it's vulnerable to small dips. Excellent company. Heinz, KHC, not an obvious entry point. That's the opposite of that statement. So this one has fallen so much that it makes it almost like a no-brainer. But again, markets are at all-time highs. This one is struggling to hold on to dear life. So basically, if the market's correct, this one would fall less because it's already fallen so much. But that's not a reason to just add to positions. So if I am long, I'm not adding. Watch this arrow. Look at it and look at where we're at. This is a long time. Once they lost this line, 33, they targeted 27-ish, this arrow, in a series of lower lows and lower highs. And that's what they're doing. They're selling rallies. So the next rally to 32, they're going to try to sell it and make a lower low. So from an investment perspective, it's not a big deal, but I wouldn't add. If I wanted to go long, I would start a position. 10 days, you get an earnings report. Not for me. KMI. Oh my God. Okay. What the hell? Are you kidding me? With this? This is the best company on the planet, largest company on the planet. Microsoft grows hand over fist, excellent debt position, excellent cash position, excellent everything. And the stock is like, whatever. And then you go to KMI with this P&L, and that's what it's doing. I have no words. What is this? What did Kinder Morgan? I know, but natural gas. Okay, so there's politics involved. Yeah, not for me. If I'm an investor, I'm out like a light. Oh my God. Yeah, it's shortable. I would buy a put in the money every month until I make money. I definitely would not be long, if that's what you're asking me. If this is a dip you think you need to buy from an investment perspective because you know something about natural gas and that it's going to 40, go right ahead. I disagree with that comment. So I would not buy this dip. Okay, so let's talk levels. That was funny. Gave me a stitch. Okay, this is a shortable zone. I'll put it on the screen so you can, so 29.80 or above. There's another one here. This is a shortable zone. I think there are sellers inside this box and backup sellers up here. And 30.8 if you want another line on top of it. And you better hold. Okay, so I'll rephrase it so I don't piss off the fans. There are buyers from here to here. Support zone. So you do have buyers, but you don't want to lose 26, 25.50. If you lose that, you open the door for much lower prices in a series of lower lows and lower highs. In other words, there are supports down here, but pretty crappy support. So you don't want to lose this one. That's your chief support right there. You have backup support right here. And then it's just a trip down to the low 20s. It's shortable. Add KMI. I've never traded KMI, period. So this will be a new thing to me. Where is my list? There it is. I will revisit it on Monday and see what happens. There is a lot of headlines with that, so be careful. KO. It's a short with a stop. Technically speaking, above 64.40, you can get to 65.60. 64.40. 65 is a sell, hard resistance. So you have resistance just above that, and then just above that. So 65.80 resistance. Okay, 65 resistance. This is a resistance and a catalyst. So you can get the 65.80, but it'll be an exit point from a trading perspective. Owning the stock for the long term is almost never wrong. Good P&L going into earnings is the only buggy thing about it. We shorted it up here. We don't short it down here. This is a solid base, and the base is wide. If I'm long from an investment perspective, I wouldn't even worry about the earnings. If it dips, it dips. So entry point for the long term, yes. All in, absolutely not. KRE, I'm short. I'm flat out short. I sold naked calls for the end of the year, so I don't have to look at it again. This thing can dip to 62. It is vulnerable and resistance above, so I'll put an arrow to show what it can do. Vulnerable from here to here, and then from here to here. That is target 1. Vulnerable. Not that big. I don't want to get people all excited about it. T1. T2 is down in the zone. T2 is target 2. So these days we get 1, 2, it's rare. This is the smaller banks, regional banks as they call them. Coles, I would not invest in Coles if you're asking me about investments. The company itself probably would sell itself if it had a chance, so why would you want to buy their shares? Technically speaking, this is a bottom from the pandemic, but that's the pandemic ago. I wouldn't rely on it. They just lost 18 and they needed to hold it. In theory, they could lose $8 from 18. So this could be single digits in the next few months. Not my forecast, but it could be just from a chart perspective. 1 second. They need to avoid 1150. As it approaches 1150, you can take a long from a trading perspective. So let me say it this way: if you're a trader for like 3 to 5 months and you want to own shares, okay, I'm with you on that. If you sell puts to buy calls to do that same thing, I'm with you on that one from a trade perspective. But it should be like 3 to 5 months. Don't expect a reaction short term. What does Harris make? Cyber domains. All right. So you better hold 202. Otherwise, 187. And don't think it's easy to get out of 232. Shortable up here. And that zone, oh my gosh. Look at it, that green zone. Resistance zone. But no hashed. Look how long this is taking to change the words. There's a bug in TradingView. It still hasn't changed. 190, 191, solid support. Bam, there we go. Trading wise, let's get you more. 222 or higher, big problem. 222 or higher, big problem. 226, I would exit. Unless you want to break out of 232. If you do, you probably go to 244, exit for sure. Okay? And you need to hold 201. 201. You lose that, you're going for a ride. Lilly, headline stock until Kennedy is in or out. Good company, excellent P&L, earnings in 4 days, Kennedy affirmation or not, blah, 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 blah. It's an own as an investment. As a trade, I don't trade it. This one is a lunatic stock. They're selling rallies. This is a rally. They're trying to decide if they want to bottom at 710 or not. If you lose 710, you're probably going to test 650. 660 would close up gaps on the left. There are gaps above. So let me see. And when I say gap, I should rename it. It's not the typical gaps you guys look at. Okay, so these are, how about unfinished business? Orders that are hung up open. Okay. So you have a seller into 890, solid buyer below 740. But if you lose the last bounce at 710, you're probably going to go to the mid 650s, the high 650s. Lockheed Martin headline stock. So people said, so here's my take. If this is a war company, I don't think it is. Part of it is. Then it shouldn't do well under Trump because he avoids wars by speaking and bullying people. He's not a war guy. He bullies people into compliance most times. So we're probably not going to be buying a lot of Lockheed Martin things for active wars. That's my opinion. Technically speaking, 475, so that was the fundamental concept that I have in my head. You can have your own. It's a good company. Technically speaking, 475 or higher is a problem. They tried to fill this box. They couldn't. They came within pennies, so maybe they push another time. I wouldn't be comfortable until they get above 480. Look at these lines here. So I'm going to put a line on the screen that is just they need to be above this red line in order for me to believe another spike. Let me zoom out. So this is a good base for an investor. If you like Lockheed Martin to own for the long term and you started longs, kudos. Just don't add, because you could come down to the 400s, would be an even better base. 410, 400, both each are great bases. Below that, bargain. So investors, yep, I'm good. Traders, yep, opportunities up and down. You should be careful though. The premiums on the options are not really easy to see. So before you put your trade, make sure that the premiums you're buying or selling are correct. Mean tweets are good. Yeah, exactly. LPLA. Who is this? Financial Holdings. Yeah, if I'm shorting Berkshire, I'm definitely not long LPLA. This is a pretty impressive P&L though. I got to give you that. I don't know what they do. I don't think you're asking me a question. You're just showing me a stock you know. What is your question? Go long? Not on this planet. I would never, ever in my entire life, ever have I ever been tempted to buy a stock up that much. If this is the day you told me this is the best company on the planet and it's probably going to be $600, I would say, okay, let me find a better entry point than this one. That's my DNA. I'm okay seeing it rally without me. I'm not okay being the chump buying it at an all-time high. So find the next dip and get long. When are the earnings? No earnings. They probably just reported. Yeah, they just reported. Solid P&L. No knocks against it. Lululemon, not a starting point. If I'm long, I'm exiting. You could get to 450. Okay. If I'm an investor, nope, not until it goes back to 340 or lower. That's me. If it goes to 428, exit. If it goes to 428 to 436, you could sell a credit call spread for a dip down to 398 to 400. So maybe it does this. You can trade that. You sell a call spread, buy a put spread. You have 58 days. Not an obvious entry point. I would not be long Lulu for a trade. If you're an investor for the long term, that's something else. Lamb Weston Holdings. My goodness. This is distribution and marketing of value frozen potato products. Wow, that's pretty niche. Okay, frozen potatoes. You better not lose 58. It's actually 58 too. You lose that, you're going to 54. Anything into 65 is a sell. That is a very niche market. If you're an investor and you're going long inside this cluster, yep, I see you. That's fine with me. Mara, do you believe me now? Do you believe me now that if you're trading Mara and MSTR to trade Bitcoin, you're making a mistake? Bitcoin is at all-time highs. Mara isn't. This is a stock, not Bitcoin. You want to trade Bitcoin or something like Bitcoin. That is a little bit more this. Even Beto is not at all-time highs, which it should be. Anyway, Mara, if you lose 16.4, you go to 13.5 or lower. What? Yeah. There's a scenario that puts this in a single digit. This is not about an income. There's nothing supporting the stock. if Bitcoin crashes. I'll say it again. If Bitcoin prices crash, and they crash once a year, at least 40%. No, at least once a year, up to 40%. That's what I meant. This doesn't have an income stream to say, okay, Microsoft will fall with the market until a certain point where it becomes price to sales of 2, then it's a bargain buy. You can't say the same for this one because it's almost entirely depending on the price action in Bitcoin. I said almost. So if Bitcoin drops to 55 or 75, which are technical possibilities, I bet you Mara is under 13. So if you're a trader, be in and out. Pop, 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 pop. If you're an investor, I would not add here. If you're looking to invest for the long term, you can start. Just make sure to leave room to double it or more. That's a gigantic head and shoulders right here, riding on 16.5 and 15.5. Warning 1 at 16.5. Confirmation at 15.3. If you lose 15.3, you're probably going to single digits in the series of months. That's my take. You've been warned. It is tradable, though. On an investment side, be careful. MBLY. I don't get it. Okay, so it was a buy the dip moment. By the time I picked up my pen in order to write the buy the dip moment, it had recovered everything and then some. So somebody needs to tell me what is happening here. They haven't updated this yet. This is last quarter. So they haven't updated the quarters. So I don't know the results. I think they grew 20% sales. I'm speaking from memory. Anyway, 19 is a huge level. So if you're looking for where they cover unfinished business, is inside this box. I'm not going to make it red because it's just an point of interest. I don't want to short it. This is about robots and using cameras like Tesla does in its cars, not LiDAR, like Lucid, I believe, uses LiDAR, maybe. So there is unfinished business here and more so higher, but this one higher, I will make it red. I think as a trade, it's shortable. At the yellow, it is shortable from a trader's perspective, but it's more shortable up here. So resistance everywhere is what I'm saying. When you lose like this, it's not easy to recover. But then the opposite is true. Look at this buyer. Like any drop towards 15 or lower should be, look, solid base. I put that before. Look at how right in the middle of this. Yep, solid base. Nick said. It's a good, I missed the entry. That's flat. I wanted to buy the dip. I just didn't have time. Mondelez, 2 days earnings. It could be at 61. It could be at 54.50. I don't know. Sellers at 59.50. Sellers at 61.50. Sellers at 63.50. You better hold 56. You lose 56. You're going for a ride. How low? Just look left. This was needed to hold. This was needed to hold. This was needed to hold. You catch my drift? Resistance. More resistance. More resistance. So they need good news in order to cut all these resistances. Meanwhile, it's possible to come down to here. Meta, again, the reaction was telling. The company on rails. You know, you can't argue with it. You just find buy the dip moments. If somebody's momentum trading the sucker, kudos. You can probably get a run up to 750. Meanwhile, if the market dips, it'll dip too. So they gave you a hint during the earnings reaction. Let's put a box around it. Look at these candles. That's within minutes. One candle. Earnings 25 January. Right top. That's insane. That is one candle. That's insane. So now you know where the buyers are. The lower 1/3 of this box, solid buyers. The opportunity is to break out from the box. You go to 750. you might have an indirect reaction to Alphabet. So if Alphabet drops, it might give you the opportunity to go along this one and vice versa. 3M, we shorted it. Like, what? I said, is this an energy company now? Or is it AI company or a DeepSeek? What the f is going on here? Look at this P&L. And then look at this price action. So for me, this was a short, cautious short. Let me see here. You can drift up to 160, so you got to respect like another $8. But as long as it's below 159, 160, it's shortable down to 142, maybe 135. So I think I sold a call or a call spread. Yeah, there we go. Credit call spread, something boring. Yep. I would not be long, I would be short. Monster, you could be long. You have 24 days until earnings. Target 1 might be 51, 51.5. And then you hit a lot of resistance. Target 2 is 52.8. That's going to be a lot more resistance. So check it out. Huge reaction here, whatever happened on this earnings. You see that? Let's put a marker on it. We are going to say low giant wick from 1124 earns. So now we know that has been a pivotal zone from back there. That's probably going to be a wall going forward. So there's a good chance this one is at 47.50. And that would make a better entry point. You can be long. I'm not saying don't get long. I'm saying this blue box, dotted box, is going to be difficult. So you can be long here or lower. If you get a chance at 47.60 or below 80, solid entry point. Trading, not investing. Philip Morris. Okay, food for thought. Don't be pissed off at me if you smoke. Okay, I have family members that smoke, not directly, but I know people. Why, when they say, oh, you can't have cars that burn fuel because they kill, we're gonna eliminate cars that burn fuel by certain year. Nobody squawks. Oh yeah, it's a great idea. How is smoking still allowed? I mean, I don't understand. Anyway, food for thought. So here we have sellers at 53.5 and 54, and 56 will be an exit point. So that's your opportunity at 54. If you can take that out, you get to 56, I would exit. Those are trading comments. Also trading comments, if you lose last week's low, you risk at losing the lows from back in October. And if you do that, you get to 47. So 47.50 support. If you lose last week's low, you could end up there. And everything above here is resistance. So if you're lucky for it to pump up to 56, I would be exiting. Those are the trading comments. The investment comments, I mean, this stock, they're buying dips. This is a dip. One would think that, okay, maybe they go up there. Look at that letter R. They're in it, and they failed at it. I think it's still there. It looks easier to get to 47 than it is to break through 57. So good P&L, by the way. Wow, look at the profits. Oh, my gosh. Yeah, not for me. As an investor, I would be wary of that. What's it going to take that out? 24. If you take out 24, wow, you've got a lot of upside. That's the investment part. Buy the dip, yes, a bunch of buyers below 16.5. Anything below 17 has been bought with appetite. So if you get that entry point, take it. I don't think you'll get it easily. You could get 20 though, 20 or 19 in the next couple of weeks, which is just before the earnings. Marathon Petroleum. Good base from a trading perspective. You could get a bounce to 152, 154. It would be exciting if you can get to 156. Terrible time to break through 160. I don't think you can. But if you do, holy moly, you get $15 of upside maybe. That's a problem. Primary problem zone. If you approach 154 and you're long and you're suffering, I would exit. If you're long from here and you approach 154, lock your profits, leave runners at best. If you're getting long into 140, okay, I got you. If you get long into 137, I got you even better. Don't lose 132. We won't talk about the consequences, but you just need to know there would be severe consequences if you lose one. Let's make it 130.5. Okay, so we won't talk about them, but they would be severe. Excellent support, huge opportunity, but I don't think it's doable. So now you're stuck in a range. Earnings in 2 days, amazing. Merck, everything I said about Lilly and all the pharma stocks before, they're selling rallies. Respect that. They're selling rallies. That's another rally. That's another rally. So anything above here is resistance. If you take that out, you hit stronger resistance. Oh my gosh. Okay. Check this out. This was an earnings reaction before. What you need, the bulls need to stay inside this box. If the bears are able to bring this chart below this box, and now there's the risk of losing 95. And if you do, you go to 90 and 85. Earnings in 2 days. It's going to be wild. Remind me to look at it. I do not trade into the earnings big time, especially with that stock. Moderna, I've said it consistently. I think it's going to zero, or it's a possibility. So it's not the kind of stock I would invest in, but it's very tradable. I know smart people that think it's going to the moon. All they need is another catalyst. They do have drugs other than vaccines. I think they're working on one cancer drug. So hopefully they find a way to make it work for the benefit of the people suffering from whatever cancer they're trying to cure. Sellers at 49 or higher, buyers below 32. And you're right smack in the middle. 45 is warning one for the bears. An opportunity to get to 52. I would exit if I'm a bull. And buy the dip into 36 makes sense. If you lose 32, you're probably going to 26. They are selling rallies. And every rally resulted in a lower low. Well, not every, but often. So be careful. Microsoft. I don't know what to say. I've said it all. You want to buy the dip, but with the P&L like this, it being the largest company on the planet, and they still give it no respect. Here's where it gets really interesting. If Microsoft is down at these levels, that means the markets are having a bad week. All by itself, it's not a sell, but you can see how technically, I'm just saying it, if we lose 405, which is not going to be easy, if we lose 405, we're probably going to lose 390, maybe retest 385 and 83. That's where they bounced last time. That's during the biggest drop pre-open on 8.5. So opportunity coming in Microsoft, yes. As a trader, I can go long now with a stop. Multiple ways through options. Pop into the live room. I'll give you several ways. I could buy a call spread. And if I'm an investor, there's no need to add. That's what I'm saying. If I'm looking to invest, I would start. I would leave plenty of room for downside. And again, that's a good conversation. You can do it in dozens of ways that don't require a lot of capital. So whether you're timing it right or wrong, it doesn't matter. It's Microsoft. You can always nibble. That is not the same with this guy, MSTR, Mara MSTR. They're doing my arrows. They did almost the first arrow and then they bounced. Look at the price action. Move coming, direction unknown. Violent move coming. I can almost guarantee it. Stocks this violent don't stay this quiet long. Oh, earnings in 2 days. Okay, there you go. The guarantee is coming. It could be at 430. It could be at 240. You heard that right. It could be at 430 or 240 in the next 2 weeks, maybe 3 weeks. It happens in sequence. Like there's 380 or higher. issues. 410 or higher, you go to 480 if you break through the blue one. If you test and lose the last bounce, which is at 285, you will finish my orange arrow. So I don't gamble like this. If you're invested in it for the long term, you did your thing. If you have 100 shares or more, sell some covered calls. There are thousands of dollars waiting for you to collect. And I mean it. This stock implied volatility is huge. Thousands of dollars. And all you have to do is sell your shares above 500 or 600. Thousands of dollars you can collect. Anyway, longer conversation, pop into the live room. Micron. I hated it up there. I liked it down here, down below here. Right now, you know, the upside that I can see is another retest of 98, and then you have to deal with all the resistance above 100. It is not a bad company. It is a bad setup. The expectations were as high as they can ever be this last year. I don't think anybody could be more excited about Micron and the AI as we were with everything that was going on. We had Powell, we had the elections, we had everything going on, trillions of dollars still pouring into the economy. So it's going to be easy, no, not easy, easier to lose the support than to break through 111. 111 would get you the 120 or higher if you can take that out. I think it's easier to lose 84, 83 than it is to breach 111, 110, 111. It's going to be a bear to get out of 103. Earnings for another 52 days. So you need to hold that line, otherwise you're going to go lower. It's an okay long as a starting point. Credit put spreads would be probably the way to trade it. Maybe even an iron condor. A Netflix. Oh Lord, this is going to be a long day. So Netflix is not a short, excellent P&L, but it's definitely not a long. I think expectations are out of whack. There is a chance that this year Netflix will be under 880. So if you want to get long at 880, maybe you need to wait it out a little bit. It can fall through no fault of its own. This P&L does not match this price action. It's a great P&L, but this price action is too great. Not an obvious entry point is a respectful way of saying it. Nike, the exact opposite. Solid P&L does not deserve this chart. This chart belongs on a company that's in trouble. Nike is still a dominant in its field. You know, this is like, is it another Intel story? I don't think so. Slightly different here. Technically, 70 should be a bulletproof floor. If you went long as an investment at 70, kudos. Don't add. You lose 70, you're going to 62 or 60. Then would be an amazing entry point. And again, it doesn't have to get there through any fault of its own. If the stock markets dropped 10%, you don't think we would be at 66 in Nike? We would. So sell a put down there if you want to add. Now, upside, 84, 90, 98, all on the docket for this year. All you need is just a little bit of momentum to break through 84. Then it gets you to 90, and then chop, and then you might get to 96, 98. So trading-wise, it is tradable. Investment-wise, it is investable. Selling puts would be a great way, but it doesn't have a lot of premium. You won't find much. ServiceNow, that is on paper, a buy to dip moment. So what scares me though is what happens when we get to these levels. Oops. So this is a problem level here. So this big red box shows areas that are going to be a challenge to cut through on the way up. P&L is fine. I don't know what they said that spooked people out, whatever. If you lose the lows from last week, you're going to establish a better footing somewhere around 940 and 900 inside this. So I guess I'm going to take this one, copy it over here. I don't ever remember doing these, and now every box I have is choppy. Is that what happens? Because that's not what was never the case. No. Interesting. I don't remember ever using dotted points, and now like every chart has one. Okay, so this area is an earnings reaction from October. So you know there are buyers here, but you know that it's elastic at least through half of it. So 900 is okay, but the bottom end of 900, solid buyers. You understand? Like if I were to break it into two, I would do it this way. And I will make this one green. Like I should go long inside of that. That would be the trading process. That's my take on it. I would not go long. If I am, it's credit put spreads to allow for that dip to happen. NVIDIA, there's another example of outstanding. Look at the speed. I will say it again, I've said it 100 times. In my lifetime, I will not see another transformation or a stronger P&L in a mega cap, terra cap than this one. I say it with very good confidence here. I won't say forever because I won't live forever, but in my lifetime, I will never see anything like this before again. And here it is, trying to hold the floor. So 130 or higher is going to be a struggle. 136 or higher is going to be shortable from a trading perspective. Long, anything below 110 is bankable. Anything below 100 is a blind leap. I would go in. I would sell as many puts as I can down in the lower sections. The one thing that scares me is that the expectations were through the roof and maybe they spit it out. Like Apple, at one point it went to, somebody said 11.11 and then it fell 40% because the love was like they couldn't have enough of it until they spit it out. So I wouldn't add with shares, keep adding like $10 apart. Like if I bought it at 122, I wouldn't add at 112. Okay, I would add under 100. And even then I would leave room to add. I see a lot of people, they buy it, it falls 6%, they add more. What are you doing? What do you know, like the next day, 6% lower? What's the point of adding 6% lower? It's like they believe it's going to bounce right back and they're going to miss out on like 0.5%. Let it go. If you're investing in it, you put money in it and it's falling, just let it go. You should pray it, like Buffett used to say. I'm happy. I can't wait for my stocks to fall so I can buy more. That's what he says, right? But not 6% lower. How about 16% lower? Anyway, it's a good company. I would be very comfortable selling puts to own shares any day of the week. No problem with that. And if I own it, I'm not worried. I'm definitely selling covered calls. Who is this? OI Glass. Yeah, I don't know what that is. Technically speaking, 1250 or higher should be difficult. 1350 or higher, open air to 1550. Meanwhile, buyers at 11, buyers at 1050, buyers at 10, you lose, even buyers through 9. You lose 9, we can have a conversation, but that looks impossible. Not impossible, improbable. One Oak, So you need to bounce quickly. You need to get up above 101 on One Oak. Otherwise, you're probably going to get to 93, which is a decent base. Charts-wise, I don't know the fundamentals. You do your homework. I think it's energy company. 101, important to recover, of course, and higher. With that, video 2 is over.